The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan with the weekly perspective for the week ending 17 October 2025. Well, first thing to note this week is that we changed the website. As you can see, if you've been there before, I'm sure most of you have, very much simplified, just really like a one-page landing page, but actually all the features are still here. So if you scroll down, we have an FAQ at the very bottom. And over here on the right-hand side, lower portion here, is a direct link to our X, the YouTube channel, and LinkedIn. So those are all direct to those. And that used to be tabs at the top about us. That's biography and media kit. If you want a premium membership consultation, the blog is there, which is very important. Everything I do that's open source, public domain, that's usually put on the blog. And so that's it. Speaking appearances, and of course, if you want to contact us, I scroll back up fairly slowly here and get to the very top. The members login is still where it's always been here on the right-hand side. And if you're already there, you can basically make 2 clicks and you'll come right in. And then, of course, you will get your name. If you give us a name or an entity, you are logged in as David Morgan. This is obviously the Mastermind portal. This, too, has been simplified quite a bit. Everything is still there, but it's mostly on these tabs here, which open up into quite a bit of stuff. But anyway, this is for convenience, the Silver Institute newsletter. It's free for everybody. You can get it yourself. We just put all that kind of thing here on the membership site, and of course our personal work, but stuff that you might want to collect on the web, we just put it here for your convenience. So with that done, I just want to go into the weekly perspective and talk about what's on everyone's mind, at least in the silver world, and that's going to take a closer look what's behind the curtain in the silver market, and as specifically what's going on in the LBMA in London, where global silver trades and are cleared and settled. And of course, we've seen a lot of headlines, social media chatter suggesting that the LBMA needs, and this is from a very good source, as much as 150 million ounces to clear the market. Now, others have claimed less, and even though the source I'm citing is well respected and known, I'm not saying it's incorrect. I'm just going to go through different scenarios. So the first scenario is basically this: how the system works. The London Bullion Market Association Clearing Network, the LPMCL, is the heart of the global precious metal settlement process. And each day it processes an astonishing 200 million ounces of silver on a net basis. That does not mean 200 million ounces of silver bars. No, these are ledger entries. These are based on offsetting numbers between members like HSBC, JP Morgan, Standard Chartered, ICBC. So here's the key. When the trust tightens and the participants start demanding allocated metal, real bars, not promises, the system must deliver. And that's where we find ourselves right now. How much silver is truly available? At last count, the LBMA vaults held something around 790 million ounces of silver. So that sounds like plenty until you remember that a large portion of that metal is already spoken for ETFs, industrial contracts, and central bank accounts. So let's look at the stress test, I call it, the London squeeze scenario. So let's run some numbers. Let's just go with a minor shock, meaning that something around 25 million ounces of physical demand will clear the market. I'm not saying that it will. Listen carefully. I'm just going through a scenario where it's a minor shock and rather insignificant amount of metal is required to clear everything. The system handles this smoothly. Bars move from, let's say, the COMEX or New York. Spreads will narrow. No panic. It's manageable. No crisis. Let's take a scenario number 2, a moderate shock. Something around the 75 million ounces of physical demand. And this could happen if that's just the amount required. But at the same time, think for a minute. It could make it worse if investors simultaneously convert unallocated to allocated accounts. And I'm going to digress here for a moment. John Adams and I have been working on something that he's talked about fairly recently, and I won't digress that far, but he was pretty key in getting people to understand the difference between unallocated and allocated. And upon about 3 or 4 speeches that he did, or let's say talks, a lot of people that held silver in quote unquote their name or in their brokerage accounts or whatever found they were unallocated and started moving to, unallocated and moved to allocated. Actually caused quite a stir momentarily. It didn't last very long, maybe a couple weeks. So I'll come back. If that's to occur, the LBMA immediate delivery inventory starts to thin because going from unallocated to allocated takes them out of their reach. Lease rates would probably stay high or maybe even rise. Refiners probably get further backed up, and shipping costs could also be affected. So the result would be strain on the market and probably a premium rise further. And let's go to scenario number 3, and this is using the 150 million ounces, which, as I said, is out there from a reliable source. And if we look at that, imagine India's new silver ETF, Chinese industrial users, and Western investors all demanding delivery at once, while the COMEX draws down the required amount to feed London. At this level, nearly 1/5 of London's total vault stock would be required in a matter of weeks. That's the kind of stress that would push lease rates even higher. It could halt refinery operations temporarily and possibly trigger a brief dislocation between the paper market and physical prices. The result would be serious strain. Hedging becomes nearly impossible. The market would clear, but only at higher prices after the total demand has been satisfied. So, who's on the other side? Most of the settlement activity ultimately involves bullion banks acting as intermediaries for the ETF's sovereigns and industrial buyers. If India's new silver ETF is accumulating inventory, it's likely sources through a London-connected bullion bank that delivers either from London vaults or via LBMA-approved bars shipped to Mumbai. In short, the LBMA is clearing nexus for global silver. What happens in London today sets the tone for Mumbai, Shanghai, and New York tomorrow. What to watch for? Here's what I'm watching this upcoming week. Lease and forward rates. If they stay elevated, refiners will keep throttling output. Vault drawdowns. Watch for another 10, 20 million ounce drop. That would confirm ongoing settlement stress. Third, India's imports. Rising solar and ETF demand from Mumbai could be the silent force tightening global supply. And 4, the ETFs. If new bars are being allocated faster than replaced, then the quote-unquote paper market may need to reprice physical silver upward to attract new supply. So that's something to think about. Does London really need 150 million ounces to clear the market? In a system built on leverage and belief, it could be a powerful reality. If enough participants demand their metal, even $1 trillion clearinghouse could start to sweat. And that brings our closing thought. In the words of our favorite philosopher from a galaxy far, far away, in silver's truth, the illusion of paper fades. Hold you must, if free you wish to remain. This is David Morgan from themorganreport.com. I'll be back with you next week.
The U.S. government debt is about to cross $37 trillion. That's not a typo. That's trillion with a T. Tariffs are being used to try and even the playing fields. Global supply chains are shifting. Inflation isn't going away. And the value of your dollar? It's quietly being drained while no one is really talking about this. The truth is, we're living through the early stages of a financial reset, whether anyone wants to admit it or not. And if you're still relying on mainstream headlines or financial advisors who just tell you to write it out, you could be blindsided when things really shift. That's where the Morgan Report comes in. For over 25 years, David Morgan has been helping investors cut through the noise. He tracks what actually drives markets, from precious metals and mining stocks to global debt and monetary policy, and show you how to protect and grow your wealth when the system is under stress. This isn't just about gold and silver. It's about having a clear-eyed view of where things are headed and making sure you're not caught off guard. The Morgan Report gives you real research, honest analysis, and strategies you can act on, even in a world of rising debt, unstable currencies, and economic uncertainty. Go to themorganreport.com today, download your free report, get informed, get ahead, and take back control of your financial future. Themorganreport.com, because $37 trillion in debt won't